November 13, 2017, 9:42 a.m. EST. Brookfield Property Partners LP bid about $14.80 billion to acquire the stake it doesn't already hold in U.S. mall owner GGP include as the companies seek to repurpose struggling bricks-and-mortar shopping centers. The firm offered $23 a share for the 66% of GGP it doesn't own, Brookfield said in a statement on Monday. That's about 21% more than Chicago-based GGP's closing price on November 6, the day before Bloomberg News reported Brookfield had held discussions about taking the company private. GGP said in a separate statement that its board formed a special committee to review the unsolicited proposal. Brookfield Property Partners is the real estate unit of Toronto-based Brookfield Asset Management Include. Brookfield Asset has been focusing on buying and revamping shopping centers to take advantage of the land they occupy in urban areas, Chief Executive Officer Bruce Flatt said on a conference call last week. GGP last month reached an agreement with Avalon Bay Communities Include to build apartments at a shopping center in Seattle, and CEO Sandeep Mathrani said the company will look to explore similar projects at other locations. Brookfield Property plans to leverage our expertise to grow, transform or reposition GGP's shopping centers, creating long-term value in a way that would not otherwise be possible, CEO Brian Kingston said in his statement. The transaction would create one of the largest listed property companies in the world, with stakes in almost $100 billion of real estate globally and annual net operating income of about $5 billion, Brookfield said. In the third quarter, Brookfield exercised all of its outstanding warrants in GGP, bringing its ownership stake to 34% from 29%, the company said in a statement earlier this month. The 68 million shares were purchased for $462 million. GGP shares jumped before the start of regular U.S. trading, gaining 8.1% to $24 at 8:32 a.m. In New York. Although there could be other bidders, we do believe Brookfield is the logical buyer for GGP given its ownership stake, Stifel analysts Simon Yarmack, Jennifer Hummert and Alexander Fraser said in a research note before Monday's announcement. The combined company would be about 30% owned by existing GGP shareholders, Brookfield Property said. Brookfield Asset, which invests across real estate, infrastructure, renewable energy and private equity, said in November that assets under management increased to more than $265 billion. The company took a stake in GGP as part of an agreement to take the company out of bankruptcy in 2010. It acquired additional GGP warrants in January 2013 and agreed to not increase its stake beyond 45% for the next 4 years. Shares of mall companies have been hit hard as the rise of e-commerce squeezes traditional retailers. Store closures are accelerating, pressuring landlords to fill empty space and reinvent shopping centers. Simon Property Group Incorporated, the biggest U.S. mall owner, has fallen 7.8% this year through Friday. Even after getting a boost from reports of Brookfield's interest, GGP shares are down 11% since the beginning of the year.